Good day, students. Once again, let me take this another opportunity to record this question, and it's based on subsidiary journals. And in the subsidiary journals, we will also touch base on the topic of VAT partly, and also I will be responding mostly, in fact, throughout. I will be doing general journals. So I will be doing general journals that include VAT and also responding to the subsidiary journals, but I will not be recording on the subsidiary journals. I will be recording in the general journal. Then I align the information which is in the general journal inclusive or taking into account VAT. Then I show you how that general journal can be recorded in the subsidiary journals. But you'll see all my plan, and I've decided on this because I want to teach two things at the same time, so that when a student leaves this video is able to record in the cash receipt journal, is able to record in the cash payment journal, is able to record in the purchases journal, also in the debtors journal or creditors journal and purchases journal, and at the same time also have the knowledge on how to record VAT in a general journal, and in general how to record a general journal, purchase, sales return, on all that stuff. And another very important part, it is how to account for a discount that is given to a customer or a discount that is given to us when we settle our account with our suppliers, or how to account for a discount that includes VAT when the customer pays us back and we give that customer a discount, and the transaction was inclusive of VAT, either VAT output or VAT input. Being aware that the VAT is at 15%, but I will be using 14% because this question paper still is standardized at 14%, but the principle, the concept, how to calculate it remains the same. It's only the matter of the percentage that is different. So there's no necessity to change the 14% into a 15% now that VAT is 15%, but later questions probably I would have adjusted them. Now we are given, first of all, opening balances at the end of the month of April 2003, and it says the following balances appeared in the books of B. Blom. So we are doing the books of B. Blom, meaning the company that we are doing the cash receipt, payment, sales journal and purchases journal. It is B. Blom. Now the open these balances, I just want to draw some line there. It might not be important for this question because I'm not focusing on the ledger accounts today. I will do the ledger accounts in another video in terms of how to do or how to draw ledger accounts from the given subsidiary journals. I'll also just highlight some very key important things that you must take into consideration. Now, in other words, this is kind of a ledger account itself, because these are the entries that are on the debit side, these are the entries that are on the credit side, and this is just general ledger accounts too, if I may say so. It's just a ledger account for everything. And on the left hand side of this ledger account are all your assets. On your left hand side they are all your assets. All these are your assets, meaning all the accounts that increases on the debit side, and on the credit side are all the accounts that increase on the credit side. We have our sales, we know that sales increase on the credit side, and we have our creditors where we bought inventory on credit from our suppliers, and we also have VAT control, meaning we are owing SARS an amount of 5,800. Yeah, although this information is just kind of looking as if it's presented randomly, it is not randomly, it is well structured. So the left hand side of the accounts is your assets, your bank, your inventory, your furniture as an asset, your purchases, meaning the purchase of the inventory, and the debtors, which is the SWAT and R. Nelson are the debtors, although on the credit side, F. Fortune, B. Boxer are the creditors, meaning the people whom we bought inventory on credit from. Now, but the opening balances is not much of my focus because I will mostly dwell on the opening balances when I am doing the ledger accounts in another video. Now, there was a requirement that was given in this question, but I will not be much focusing on this ledger account. On this requirement where we are to do general journal. This is the most part that I will be focusing on, the general journal. Then after the subsidiary journals is also the other part that I will be highlighting, how to link the general journal with the subsidiary journal. The ledger accounts is not for today. The trial balance, probably no. Income statement, I've covered income statement in other questions, so I will not be doing the income statement in this question. And also trial balance, maybe I will do it later on, but I don't want also to do it in this question, because the minute you already have the ledger accounts, then you can transfer that to a trial balance. So my focus is general journal. Then focus number 2, it is the subsidiary journals. Then ledger accounts will be at a later stage, or a video that will continue from the same information that I have in this question. Now I already have explained everything now to you. How are we going to be responding to this question? Now we are given transactions, and these transactions are not very much detailed transactions where they say bought inventory on credit from so and so, or sold inventory on credit to so and so. They just use some terminology and some language that is very much financial accounting language for you to understand certain things. Now it says in the first transaction during the month of May, it says, and take note, it says invoices issued during the month of May. Remember, the above transactions were transactions from the previous month, which is the month of April. So now these were the opening balances for the month of May, closing balance in the month of April. Very important also to be mindful of that. So we are busy with the month of May. And take note of what I said above. It says 14% VAT inclusive where applicable, meaning now all the transactions that we have here, where it is necessary or where it is applicable, VAT is already included, and all the calculations must be taken into nearest cents, and I will be doing that very well for you. We have invoices that were issued during the year. We issue invoice only if we sell on credit. So now, meaning these are credit or sales on credit. These are credit sales. So now, in other words, in these two transactions, 11 and 15, we sold inventory on credit to these two different customers. Who are these two different customers? It is customer R. Nelson and customer S. Swat, and we sold inventory worth 173.80 and 31.85 to these two customers, and we sold this inventory on credit. Now I will be recording this information in the general journal. Then after, I show you how it was supposed to be recorded in the columns in the data journal. So now let's start with our general journal. We said we sold inventory on credit to customer R. Nelson worth 173 rand 80 cents. So now we say 173.80 cents. We have to debit this customer. This date is on the 11th. We have to debit debtors control or debtor R. Nelson, because this data is increasing by the amount that he bought inventory on us from. It is 173 rand 80 cents, and this amount includes VAT. Take note of that. VAT is already included on this credit sale. Now, because we have VAT included, we need to make sure that we account for VAT, which is the VAT we call output VAT. When inventory goes out, the VAT is output. So we have output VAT, which is VAT that we are collecting. Remember, this is the VAT that we are collecting. Then after, we record our sales, meaning our income that we receive on the sale of this product. Then I will say 173.80. VAT is already included. We need to say 14 over 114, because the amount before VAT was 100%, and when we added 14%, this amount now it is 114%. That is why we say divide by 114, which is 114%. So now we do that, it gives us the amount of the output VAT as 21 rand 34 cents. So now this is our credit sales transaction as 21 rand 34 cents in terms of VAT. Then we say minus 173.80, and when we do that, this gives us the amount of the sales, meaning the one that will be income to us. It will be 152 rand 46 cents. So now this is the amount of sales. At the same time, you could have said 173.80 cents, multiply this by 100, because we are looking for 100%, because sales in this case is 100% before VAT was added. Divide this by 114. This will give you exactly 152.46 as the amount of sales excluding VAT. Now I want to highlight the fact that this company is using a perpetual inventory system. They are not using periodic. Let me highlight that they are using periodic, not perpetual. Cost of sales will be calculated later on. Periodic inventory system. So now, because they are using periodic inventory system, that therefore means that we will not have the transactions where we say debit cost of sales, because if it was perpetual, we'll say debit cost of sales, then after we say credit inventory. Why am I saying this is periodic, not perpetual, yet it's not specified? It is because under our opening balances, we have the transaction that says purchases. Purchases, or the term purchases, is used in the periodic inventory system. In the perpetual, we say inventory, we don't say purchases. So now, because of the word purchases, it is the one that makes us to say this definitely it is the periodic inventory system, meaning cost of sales will be calculated at the end of the accounting period, not during the accounting period. Now we have done that. Remember, if it was perpetual, this is what we will have to add, meaning debit cost of sales, then after credit inventory. Then after, you have to take your amount of sales. This is not a requirement, 152.46. You multiply this by 100%. You divide by, I don't know how much will be a markup percentage. If the markup is on cost, maybe it's 50%, then you'll divide by 150. But we are not given this one. Probably you'll see that, well, there's another video that I'm planning to do also on VAT, where there is VAT. There's a markup percentage, and there's also a cost price. Cost price both, also the markup percentage both on cost price, and markup percentage and also on the selling price. I will also record that video, and it will be the first one in terms of the alignment of the videos, so that you listen to that one before you come to this one, so that when you come here you are already clear in terms of understanding. Now so we stop here. We don't record cost of sales because we are using the periodic, not the perpetual inventory system. We go to the second date. The second date, it is the 15th of the month of May. On the 15th of the month of May, we sold inventory to another customer, which is S SWAT, at the value of 3,185 rands. 3,185 is the value of the inventory sold on credit to this customer. So now we still do the same thing. We debit the data or debtors control, and I prefer to say debtors control. Then after, we record the amount of the data that he owes us, 3,185 as the amount that the customer is owing us, and we record the output VAT. We record output VAT. Then after, we record our sales. Then we do our calculations, and we say 3,185, multiply this by 100, divide this by 114. When we do that, it gives us straight the amount of sales as 2,793.86. Then we say minus 3,185. It gives us the amount of VAT as 391.14. 391.14. Now I've recorded these two transactions. So let me now go to our subsidiary journals, because I said I will do the link between the general journal and the subsidiary journals, but I will not be recording in the subsidiary journals, but I'll be showing you in terms of the headings. Now I've done the draft skeleton of these subsidiary journals. Remember, these are the credit sales. That means we are under our sales journal. Sales journal, it is where we sell inventory on credit. So whatever we sell on credit get to be recorded in the subsidiary journals. So now, which is sales journal. That means in this case, where we have a data, under our data's control, we record 173.80. Let us look if we do have data's control column. Yes, we do have data's control. So now that 173.80 will come here. There is a VAT of 21 rand something. VAT was 21 rand 34 cents. So the amount of VAT will go here, 34 cents. Then the amount of sales, which our sales amount was an amount of 152.46. So now this will be 152.46. 152.46. This is how you record. This is the column for sales, and in that column for sales we do have the account for sales. For output VAT, we record it under the column of VAT. Under data's control column, we record this amount. So now your general journal is the duplicate of the accounts that will be recorded in the general journal. Everything is just copy and paste. So now you do the same again with the second one. Now don't forget, under the name of the data you write R. Nelson, the name of the data. Sundry details, we don't write anything. Then now we come to the second data, is copy and paste. Data's control, you record this amount. Under VAT, you record this amount. Under sales column, you record this amount. Under the column for sundry data, then you write the name of the data, which is as SWAT. That is the data that we sold inventory as in the second transaction. So now this is how you will be recording this. Record it at your time. I'm just highlighting to you, it's just copy the same numbers to the respective headings. The second one, it is the credit notes that were received for goods returned. Now the credit notes that we receive, we only receive credit notes if credit notes received for goods returned, meaning in this case we returned inventory back to the customer. Now the minute inventory is returned back to the customer, this is a return to the supplier, not the customer. So now this is return to the supplier because we received the credit notice, the invoice, or it is the paper document that is between us and our supplier. Meaning where we bought inventory on credit, we have returned it back to our supplier. So this is return to the supplier. And the return to the supplier gave us a credit note of 257.50, which we received from the supplier. And also at the same time, when the customer return inventory back to us, we will issue the credit the invoice to the customer. But in this case, we have received this credit note from the supplier. Then the 257.50 is the value of the inventory that was returned to the supplier, and the supplier sent us this credit note for the goods that were returned. So now, in other words, this will be recorded under what we call our purchases journals. So now let us record this first in the general journal because it is the return of the inventory. Then we record this. What will be debited? We debit creditors control because our creditors will have to decrease on the debit side. Remember, a data is increasing on the debit side. In this case, we sold inventory, and also here we sold inventory to a customer, and the customer must, or our account of the customer must increase by the value of the inventory the customer bought. Now we have return, meaning our liabilities, because a creditor is a liability, and if we're returning back the inventory, the liability, meaning our liabilities, will decrease by the same amount. And the amount that our liability will decrease by is 257.50. We have 257.50. Now we need not to be ignorant of the fact that there was VAT implications. Now we need to take into account the input VAT. We need to take into account the input VAT. Then after we say it is the inventory that has been returned, so now we need to credit our inventory, meaning we have less inventory in our disposal because we returned part of this inventory. 257.50, we say by 100 divide by 114. This will give us the cost of the inventory before VAT is taken into account, 225.88. Then we say minus 257.50. This gives us 31 rand 63 cents. So now this is the amount of the input VAT that must be given back to SARS. Remember, when we bought inventory, we would have claimed this VAT from SARS as input VAT, because a VAT vendor has the right to collect VAT on behalf of SARS when he's selling the goods, and also claim VAT from SARS when he's buying the goods. Now, after we have claimed the input VAT, we returned the inventory. Therefore, now we have to say, SARS, here is the amount of VAT that we claimed from you on the goods that we previously bought on credit. So now this will be how we record this. We need to record this now in our purchases journal, meaning where we purchase inventory on credit. And to some of the institutions, they will normally have a separate journal for this, but to some of the institutions, they will normally don't have a separate journal. In other institutions, they will say purchases journal return, but in other institutions, they will just combine all the figures in one transaction, and recording that in one transaction, in other words, it means we now don't have to have two separate journals, but all the returns will be recorded as negative in terms of the figures. So now this is the approach that I use. All the returns will be recorded in the purchases journal, but as negative, reducing our purchases. So now that means our amount of 257.50 will be under creditors control, 257.50, and we record this as negative because a return, and also the VAT amount to be negative, and under our now purchases, the amount will be 225, which is our inventory. 225 point, let us verify that. Yeah, 31.63 is the VAT, then 225.88 is the inventory, which is our purchases. Then 257.50 is the creditors control. So now this is how you will link this with the subsidiary journal. Not forgetting that under the creditor, you mention the name of the creditor. Who is the creditor in this case? It is the person we have returned inventory back to. Let us check who our creditor was. Our creditor in this transaction was F. Fortune. So this is what you write under the creditor. F. Fortune, you write that creditor. Then under date, you write the respective date that is given to you. This will be the name of the creditor that you write here. So this is how you link general journal and VAT, and now with the subsidiary journals. We go to the next one, which is invoices that were received for goods. Invoices that were received for goods. Now this is on the 3rd date and on the 6th date. Now this is credit purchases. The minute we receive invoice, it means we bought inventory on credit. Invoice we receive when we buy on credit. That means here we bought on credit, we buy on credit, and the supplier gave us the invoice, meaning the supplier sent us the invoice stating that Mr. B. Blom, this is the value of the inventory you bought. You bought this number of units at this unit price, so this is the total value of that you owe to me. So now we're receiving this from the creditor for the goods that we bought, meaning we bought goods from our creditor. Oh, this is not the one invoice received, that is before. We have the credit notes that were issued during the month of May, meaning the 12th and the 18th. So now this is the credit notes that were issued during May. So now this is our credit notes that were issued during the month of May. Now credit note, it means that we have sales that took place and the customer returned. Sales took place before, then the customer returned. So a credit note that is issued is when the customer returned inventory and we issue the credit note to the customer. Previously, when we had the credit notes that were received for goods return, we clearly explained that, and also the invoice that took place during the year. Now for this one, this is returned by the customer. Returned by the customer, meaning the customer is returning inventory back to us. Then now we issue the credit note to that customer. So now whenever there's a credit note that is issued, you know that is because the customer returned that inventory and we issued the credit note. But in the case where the credit note is received, that means we returned inventory back to the supplier and the supplier sent us the invoice, and now we have received the invoice, meaning we receive invoice when we return inventory to the supplier, and we issue the credit note in this case when the customer returned back to us. Please make sure that we are very clear with these two. They are quite important. So now this is returned by the customer, and it's the same customer that we previously sold inventory on credit to, if you see there. So now it's the same R. Nelson, it is S. Swart. Previously it was invoice issued during the year, and this one was credit sales, meaning this is when we sold inventory to them on credit. And now this is invoice issued, meaning they are returning the inventory now back to us as the business. So now this is the similar transactions. Just another one is the reversal. So now we have our number transaction. Check the date of the transaction. It is on the 12th and on the 18th. We have the 12th and the 18th. Now, meaning our sales will decrease and our output VAT will also decrease, and also our debtors control will decrease. Debtors control will decrease. Then you mention the name of the debtor. Very important also to highlight that our debtors control will decrease. Remember, just want to go back previously. This was a credit sale. Here we sold inventory on credit, and here we sold inventory on credit. And now here the customer is returning the same or part of that inventory. Now it means you have to record a vice versa of what you did previously. Debtors control was debited, now you credit. Output VAT was credited, now you debit. And sales were increasing on the credit side because they're supposed to be, but now sales are to decrease on the debit side because the customer has returned the inventory, reducing our sales. Now we say our debtor is returned inventory worth 100 Rand. VAT is included, remember. So now we need to say that 100 Rand VAT is already there. Then we multiply this by 14 over 114, and this will give us the amount of VAT output that must be returned. This is 12 Rand 28 cents. Then minus 100 Rand, then we get to the amount of sales 87 rand 72 cents. Now remember, this we are recording it in the same sales journal, but we record it as negative. Remember, I'll be using that approach. Now under my sales journal, under debtors control, there is 100 rand, but it will be negative. Remember, you don't just randomly record. You look at your general journal and you're like, okay, in my general journal I have a line item on an account that says debtors control 100 rand. Then now I go to my subsidiary journal, I look for the same column, debtors control 100 rand but negative. Why? Because a return. Then I say, oh, there's another column called VAT, another column called sales. Then I go to my transactions and I say, in my transactions I do have the line item called VAT, but I specified it here as VAT output, but you can say VAT control, but I preferable to say output VAT, but it all goes under VAT control at the end of the day. Therefore now, meaning we do have the VAT transactional account, this must go under the same column of VAT that you see in our subsidiary journal, which is our VAT control, but make sure that figure is in brackets indicating that it's a return reducing our sales return. There's another column called sales, and we come again to our general journal and like, no, we do have transaction called sales or account called sales. Therefore now the amount of sales must be recorded in the same column of sales in the specified subsidiary journal, and make sure that this is recorded as negative, and the reason for that is because this is a return of the inventory by the customer. Now I think I've made myself quite clear. I'll be repeating this on different transactions. Now we have recorded the first return. Now we record the second return. The second return, I'll just do a general journal, then you can come and paste the same figures. Also, don't forget again that under the data, you come and write the name of the data wherever the transaction is. Write the name of the data, write the date and the document number. For the second one, there won't be necessity for me to repeat it because it's the same recording. Now this data, it is SWAT returning inventory worth 300. So now that means we need to say the date is on the 15th. We debit our sales. Remember, sales is income and income is decreasing on the debit side. And output VAT is a liability because it is the VAT that we are collecting on behalf of SARS, meaning it is the amount that is due to SARS. So now, meaning in this case, output VAT is decreasing on the debit side because SARS has to be giving us this amount. Debtors control is a debtor. We know that debtors decrease on the credit side. It's an asset decrease on the credit side. Why the debtor is decreasing is because the debtor is retained inventory. So now the amount that he previously owes us must decrease by the value of the inventory that he retained. So now our output VAT in this case will be 36 rand 84 cents, and we minus this from 300, it will give us 263. It gives us 263.17. So now you do the same thing, record sales under the sales column, record output VAT under VAT control column, then debtors control, you record it under debtors control column. Now I'm not going to be showing you that again. It's the same copy and paste information. Now we go to the next page of our general journal and we go to the next transaction of our provided information. Invoice received for goods. Invoice received for goods is on the 6th and is on the 3rd and on the 6th. Let me highlight that this is done, this is done, this is done, but I'll sometimes delete it. Now we are busy with the next one, invoices received for goods, meaning this is our credit purchases, meaning we bought inventory on credit from our suppliers, and our suppliers they sent us an invoice. So this is a credit purchase. Credit purchase. And I also want to highlight something again in line with the previous one. Credit notes have something to do with the return, and credit notes have something to do with the return, but invoice have something to do with the purchase. Invoice have something to do with the purchase. Either we purchase from the supplier or the customer bought from us. In other words, we have sold. So invoice is either a purchase or a sale. Credit note is either a return, and a return, it could be a return back to us or a return back to the supplier. So also be mindful of the tips that I'm providing to you. So now, invoice received for the goods. That means we bought inventory on credit, and our supplier sent us these invoices and we received them. And who are these suppliers? It is F, Fortune, and B Boxer. And these are the real deal supplier that we have in our business. Now let us record this in our general journal. Then now in our general journal, this will be debit purchases, because this is periodic inventory system. Then we say now VAT control. I'm using this interchangeably. VAT control, which is input VAT on the purchase of the inventory, is recorded on the debit side of the VAT control. Then after we have creditors control. We have creditors control. Why creditors control? Because we bought inventory on credit from our suppliers. The inventory that we bought include VAT. Remember that. And the amount that include VAT, it is 1,257.50. 1,257.50. It is 1,257.50. It includes VAT. This is the amount we owe to our creditor. Now we need to say to this amount of 1,257.50, we need to know how much is the 100% of that amount before VAT was included. Then the 100% of this amount before VAT was included, it is 1,103 rand 7 cents. We say minus 1,257.50, and this gives us the amount of VAT is 154. Amount of VAT is 154.43, and the amount of the purchase plus 1,257.50. The amount of the inventory is 1,103 rand 07 cents. So now this is how we record this, and now we go to our journal. Which journal? The purchases journal, because we bought inventory on credit, and the purchases journal, we record inventory that we bought on credit. So now we go to our purchases journal. We record as it's supposed to be. All figures will be positive. Then we write the name of the creditor, F14, under purchases 1,103.07, VAT 152 point something, then creditors control 1,257.50. Exactly, you're done and dusted with that. Then we go now to the next one. Next one, I will not be showing that in subsidiary journal because it is the same transaction in terms of recording, just different figures. The next date, it will still be the same. Purchases, we have our VAT control, which is input VAT. Then we have creditors control. Let us look at the amount that we bought inventory on credit for from the supplier B Boxer. 736. It is 736. So now we record 736 and we say this 736 include VAT. We need the 100% of this figure before 14% was added. This gives us the cost of the inventory. And I want to highlight the fact that the cost of the inventory must always exclude VAT. 736. The cost of the inventory must always exclude VAT in the case where you are dealing with a company that is a VAT vendor. The cost of the inventory or the cost of the purchases, which is inventory, must always, not sometimes, always exclude VAT. Remember, take note, this amount does not have VAT. If you say plus VAT here, we get the amount of the creditor. And at the same time, the amount of the creditor must always include VAT. Similarly, with the sales, sales must always exclude VAT. If you look at our sales previous transactions, here is our sales. The amount of VAT is not here. The VAT is separate, and the amount of the data, it includes VAT. Even when the customer returned where our data were credited, we can see there our sales always, they don't include VAT, and our VAT, it is separated, and when you say sales plus VAT, you get the amount of the data. So always make sure that is the case in the case where you deal with a business that is a VAT vendor. Sales and inventory must always not include VAT, meaning VAT must always be separated, be it VAT input or VAT output. It must always be separated from the sales and from the inventory, but added to the purchases and the creditors control and the debtors control. So now you can record this as it should be, as I've shown you previously. Then we come to the next transaction, which is the cash sales slip issued. So this will indicate that this is cash, and cash must go to the cash journals. This is on the 5th. It must go to the cash journal on the 5th of May. Now it says cash sales slip 410.50, and another one, it is 4,250. Then now the question is, which journal should this go? Is it cash receipt journal? Is it cash payment journal? It says cash sales. That means we did not pay here, we sold. Cash sales, meaning if it's cash sales, meaning we sold for cash. Sold for cash. So now if you sold for cash, that means this will go to the cash receipt journal. Cash was received because the inventory was sold. And we don't have the name of the customer, it was just a cash sale because it's not a credit sale. So now in this case, we just go and we say debit bank. Why? Because money was received, inventory was sold for cash. How much is the money that was received? 5,450 was received. 5,450. Inventory is going out. Output VAT must be recorded, which is VAT control. Output VAT. And our sales must increase because we sold inventory. 5,450 by 100 over 114. What do we get? We get the amount of sales as 4,780.70. Minus 5,450, we get 669.30 as our output VAT. 669.30. So now this is our cash receipt journal item. Let me just draw a line here to show that we are tapping into another journal, cash receipt journal. Now we need to look for the column called bank, look for the column called VAT control, look for the column called sales. Then we record these figures in their respective columns. Let us go and do that immediately. Cash receipt journal, we do have a column called sales, and we record the amount of sales as how much? As 4780.70, exactly as it is. Then we look for the column called debtors control, and we're like, yes, I know we do not sell on credit. Then we look for the VAT control. Yes, we do have the VAT amount also here. There is 669.30. Then after we come to our bank, we record the amount of the bank under the bank column, which is 4,540, and we're done and dusted. Now we have captured all of that, and we record the date as it's supposed to be. Under details it will be cash. Don't forget, under details it will be cash because we sold inventory for cash, so it will be captured there as cash. Then we go to the second one where we sold inventory on credit, and for this one I will just do it in the general journal because subsidiary journal is the same columns. It's 4,250. We debit our bank because money was received, and the amount that was received, it is an amount of 4,250. Bank 4,000, let's verify, 250, 4,250, that's what was received. Then we need to take into account output VAT, which will be recorded under VAT control, but this is output VAT. Inventory is going out, then this is output VAT. Then after we capture our sales, which is 4,250 by 100 divided by 114, we get our sales amount 3,728.07 minus 4,250. We get the amount of the output VAT as 521.93. So now this will be our transaction in the general journal. Record this under bank column, record this under VAT control column, record this under sales column in the cash receipt journal. Then after we record under details cash. I hope I'm making sense in all that I'm saying. Now we come to our cash receipt issued. This is very important. Please make sure that you don't miss this transaction. This transaction is quite important, and this transaction is also very important. The ones with the discount, they are very, very, very crucial, and I'll make sure that I grab all these transactions. Where there's a return, where there's a settlement and a discount is given, is very important. Now I will be recording the next one where it says cash receipts issued, meaning these are the cash that were issued. CPJ money went out. Where did this money go? This money, sorry, cash receipts issued. Okay, this is cash that was received. Sorry, cash receipt journal. Still, there's no money that went out there. It's cash receipts that were issued, meaning there was a payment done and we issued an evidence that we received money from this customer. So money was received, we're just issuing the evidence of the receipt of money to the respective customer. This customer is also in account previously written off as bad debt. 1,000. So this customer paid us previously, he was recorded as irrecoverable. Then now we need to account for this. How do we do this? Remember, this person is no longer a debtor to us. He was a debtor, written off, no longer a debtor, and he came back and circled the account. So now we debit the money that we received, which is cash. We received an amount of 1,000 from him. Now we need not to be ignorant of the fact that VAT must be taken into consideration. Now, taking VAT into consideration in this case, meaning we need to say how much VAT is supposed to be accounted for. Because previously we sold the inventory to a customer and the customer did not pay us, and when it was written as a bad debt, we reversed that output VAT. In other words, now we need to account for this output VAT which we have received in this case. Now we need to say VAT control, and this will be output VAT. Then this will be bad debt recovered. Now we need to say the amount of 1,000 by 14 over 114. We get the amount of VAT as 122.81 minus 1,000. It is 877.19. The reason why we account for this, I want to explain, this is very important. The reason we account for VAT is because when inventory was sold to the customer, output VAT was recorded. And when the customer became a bad debt, that output VAT was cancelled because this customer was not able to pay us. The output VAT was cancelled. Now that the customer is paying us, in other words, we are saying, SARS, we are now more kind of selling again to this customer. Therefore, now we have to give this output VAT back to SARS. So now we have captured also, that is the end of the page here. Then we come to the next transaction. Next one, it is SWAT 1.8 less 5% discount allowed. Meaning this customer has paid us, and after he has paid us, we are now giving him a discount of 5%. So now it is very important to be mindful of what I will be explaining here. Now we need to record or acknowledge the fact that money will be received, and out of this 1,800 we are only receiving 95%, meaning in the bank we only received 1,710, and this is the customer who made this settlement. It is a customer by the name SWAT. So now we need to account for the VAT side of this transaction. Now the VAT side of this transaction will be the output VAT and the discount. So we start with the discount first. Then after we have output VAT, remember this is output VAT on the discount. Then after we have debtors control. The debtor will decrease by the amount that he was circling. Then after we say the reason why we received 1710 not 1,800, it is because there was a discount of 90 rand, and included in the discount there is VAT. So now we need to extract the VAT on the discount amount. That is why we say 90 by 14 over 114. We get the amount of the discount of the VAT that is in the discount amount, which is 11 rand 5 cents, and we say plus 90 rand. Then we say the amount of the discount excluding VAT is 78 rand 95 cents. Let me just explain this. Why are we doing all of this? Remember, when we sold inventory to the customer. We sold inventory to this customer worth 1.8, assuming the customer will pay us back 1.8. So we calculated VAT on this 1.8 and we said SARS 1800 is what we are going to give to you, because we sold inventory worth 1.8 and multiply this by 14 over 114. This is the amount of VAT that we are going to give to you, SARS, 221.05. This is what we have done. We said, SARS, this is output VAT due to you. Output VAT due to you because we sold this inventory to a customer and we expect the customer to give us back 1.8 because the inventory is worth 1.8. And we collected this VAT of 221.05 and we gave this to SARS. We gave SARS this amount and said, SARS, get your output VAT that you deserve, because the customer will pay us back the full 1.8. And the customer is paying us later on, and now the customer is no longer paying us the full amount of 1.8, but is paying us 1,710. Then now what do we do in this case? We say, no, we received less than what we're supposed to receive, SARS. That means the VAT that we have given you, bring part of that back. In other words, out of this 1710, this is the amount of VAT that we're supposed to have given you, SARS. We're supposed to have given you, SARS, 210 Rand. But we gave you 221 under the assumption that the customer will pay us back the 1.8. But we gave the customer 210. So please give us the difference of 210 and 221. So now how much that difference? 210 minus 221.05. That difference, it is 11 Rand 5 cents. The 11 Rand 5 cents, the same 11 Rand 5 cents that I calculated from that 90 Rand. So now either way you calculate, it does not matter. You can calculate output VAT that was collected and given to SARS, and the output VAT that was supposed to be collected and be given to SARS, which is this figure and this figure. And the difference between the two is what SARS must give us back as the output VAT decreasing. It is quite important and a very common question, and sometimes students find it difficult to calculate VAT on the settlement discount amount. Now we have captured this one very well. Now we need to go to the previous one and say this is CRJ. Under bank, this is what you record. Under VAT output or VAT control, that is what you record. Under subsidiary ledger, this is what you record. Under subsidiary details, this is what you record. Bad debt recovered. Let me go now to that cash receipt journal and you see what I'm referring to. Now in this case we have our cash receipt journal. Bank amount, you know how much VAT, you know how much sales. Let us look. No, we don't have sales. We have the amount of bad debt recovered. In this case, our bad debt recovered, it is 877.19. Where does that amount go? That amount go to our subsidiary ledger. Subsidiary details, that will be bad debt recovered. This will be your bad debt recovered. Under details, you write the name of the debtor, O. Olsen. O. Olsen. Here you write bad debt recovered. Here is 877. Here is the amount of VAT. Here is the amount of bank. And you are done with the subsidiary journal at the same time with the general journal. For this one, same thing. Now you record under bank this amount, and under these two figures becomes negative in the subsidiary journal, please, not in the general journal. These two becomes negative in the subsidiary journal, and under our debtors control we have 1,800. So now we'll be recording this like this. Debtors control in the cash receipt journal, debtors control 1,800, 1,800, Discount here will be how much? 78.95, if I still remember. 78.95. Let me just verify that. 78.95, yes. Then after we have 11.05 and we have 17.10 here. These two are negative, so that 1.8 minus this, it will give you 17.10. Make sure that you capture it in that manner. Your total of your bank must be debtors control minus discount and minus VAT. Then we have captured this two. Then we go to the next transactions. Going forward, we have a furniture that was previously bought on credit, that was bought, sorry, for cash, 1,270. 1,270. We debit cash that was received. We have 1,270. Now we need to account again for VAT. We cannot be ignorant of VAT, and our VAT will be output VAT under VAT control. VAT control, which is output VAT. Output VAT. Under VAT control, we have output VAT. Then we have our income that we received, sales that we received, and that will be recorded as our sales, which we normally record that as asset disposal, not necessarily as sales. Normally capture that as asset disposal, but I'll just write furniture that has been sold. So this will be asset disposal, which will normally be our sales. Then after we record our figures, they're supposed to be, or we can still capture this as furniture, but this is the asset that has been disposed. Then we can say furniture there. Then we have 1,270 by 100 over 114. This is 11.4.04. 4.04 minus 1,270, which will be 155.96. We sold furniture in this case for cash, and this is the cash that we received for the sale of that furniture. So straightforward, but this will be recorded under bank, under VAT control, and this amount will go under our subsidiary ledger because we don't have the column for furniture or either asset disposal. So now this will be furniture or asset disposal, but it will be recorded under subsidiary ledger, this amount, subsidiary ledger, and under our standard details, then we write our furniture. Then under our details, what do we write? Under details, we write MLOW. That is details. So we now have SWAT. Remember, we received cash from who? From SWAT. SWAT is our debtor. So now when you receive money from a debtor and there's no discount, very easy. You debit bank, you credit debtors control. You don't take into account VAT because VAT was accounted for a long time ago. 352, you are done and dusted. Column is bank, another column is debtors control, done and dusted. The reason why in the previous one, when the customer paid us, we did all of this is because this customer was given a discount when he came and settled his account. Remember, when the inventory was sold, output VAT was recorded. So that is why we don't account for VAT or in this scenario. Now we come to the checks that were issued. These are the last transactions. I will probably not do all of them, honestly. The first one is the receiver of revenue. we are making a payment here. Who are we paying? We are paying VAT to who? To SARS, because the VAT is due to SARS. So this will be a CPJ. In fact, all of these will be CPJs. But my main transaction that I need, it is this one and this one. The petty cash ones are not that much of a transmesh. And also this one, just recording that one as debit, VAT control or SARS VAT control. SARS VAT control was VAT control as an account. SARS VAT control or VAT payable. Then after of VAT control, then we credit our bank because we paid SARS. How much have we paid to SARS? In the cash payment journal, it is 5,800. It is 5,800. 5,800. Then now we ask which columns will this be recorded. This will be recorded under bank, and this will be recorded under sundry ledger. Sundry ledger, not under VAT control. We are paying SARS now. This will be recorded under sundry ledger, and under sundry details you write VAT control, then under details SARS receiver of revenue or receiver of revenue. That is the person we pay. So now we have done the recording of the payment that was due to SARS. Then we go to the next one. Next one, it is a payment to F Fortune in settlement of what? In settlement of the account at the end of April, less 5% discount. So now let us look at R Fortune. How much did we owe him? End of April, beginning of May. There we owed this folk 490. So now we need to record this transaction of 490. We are paying him, and he gave us a 5% discount on this 490. So now meaning our creditor must decrease because we paid our creditor. Creditors control. How much did we pay? We're supposed to have paid him 490, but we paid him less than 490. But our creditor must decrease by the amount of the settlement, including discount. Then after now we need to say VAT must be accounted for and discount, and there will also be bank. We know that bank will be 95% of the 490. Then we say 490. We multiply this by 95%, and we discover that 465 rand 50 cents is the amount that we have paid. 465.50, we say minus 490, we discover that there was a discount of 24 rand 50 cents. This is the amount of the discount. This is my calculations now. This is the amount of the discount, and this amount of the discount is including VAT. So now we need to know how much is VAT included there. 24 rand 50 cents by 14 over 114. Then our VAT will be 3 rand 1 cent. So we go there, we record our VAT, which is VAT control, input VAT. This is 3 rand 1 cent. Then we say 3 rand 1 cent minus 24 rand 50 cents. 24 rand 50 cents. We get the amount of the discount is 21 rand 49 cents. This is the discount received, which we call it interest income in the latest days. Now let me again go to my other method of calculation. We can now say how much of VAT did we claim from SARS when we bought the inventory on credit? We claimed VAT from SARS based on the amount that we owed. We said 490 by 14 over 114. And we said, SARS, this is the VAT that you must give to us as input VAT, 60 Rand 18 cents. And SARS gave us the 60 Rand 18 cents. But we paid less. We paid this amount. And we paid less than what we supposed to have paid. Then SARS will say, no, give me part of the VAT. You claimed too much because you paid a lesser amount. Now that you paid 465.50 multiplied by 14 over 114, we need to know how much VAT have you paid for. You only paid 57 Rand 17 cents. So 57 Rand 17 cents minus 60 Rand 18 cents. You owe me 3 Rand 3 cents. So SARS will say, give me 3 Rand 3 cents because you paid less than what you're supposed to have paid. So the difference of that input VAT must come to me as SARS, or must come to me as SARS. Now that is why we have now this 3 Rand 3 cents. You can calculate it in any way, you'll still get to the same 3 Rand 3 cents. And after not forgetting that there must be discount, which is interest income in the language of today, discount received. Previously it was discount allowed. Very important to master this calculation. Very popular question when it comes to general journals where there is a VAT to be accounted for. Then after now, not forgetting at the same time to capture this in this given journal, which is our cash payment journal, which is our CPJ. Now under bank, this is what we record. Under discount, this is what we record. Please don't forget once again that the 3 Rand 3 cents and 21 Rand 49 cents, this must be recorded as negative in their respective column under our cash payment journal column. Then under creditors control, we have our 490. So all transactions are just give away, copy and paste and record to the respective columns that this is supposed to be recorded. Now I'm done with that one. Let me go to the next one. The next one, we come to this other date where wholesale LTD for the goods 54,000, meaning we paid to wholesale LTD for goods. And remember, these are the checks, meaning we bought inventory for cash using our check. 54,000 was our purchase. So now what do we debit? We go to the next page. We debit our purchases. Then we have our VAT control, which is input VAT. VAT control. And this is input VAT. Then after we credit our bank, because we sold or we bought inventory on credit. The amount of the bank, it is 54,000. Then we say 54,000 by 14 over 114. We get the amount of the input VAT as 6,631 Rand 58 cents minus 54,000 minus 54,000, we get 47,368 and 42 cents. And now you do the same thing. We record this in the cash payment journal because we paid. Under purchases column, this is what you record. Under VAT control column, this is what you record. And under bank column, this is what you record. Then under details, we know that the inventory was bought from who? It was bought from the wholesaler, which is Wholesale Ltd. Then under details we write Wholesale Ltd, and we're done with that. There is Wholesale Ltd. Then after petty cash, this is a payment. So petty cash is just debit our petty cash by an amount of 200, and we credit our bank. Then now, because we don't have the column for petty cash, that means the amount of the 200 will be recorded under sundry ledger. The minute an account does not have a column, it goes to the sundry ledger. So now that is why the petty cash amount will be recorded under our sundry ledger. That means in our cash payment journal sundry ledger we record 200, but we do have the bank column for the other entry 200. Then now we go straight to the amount of 200 in our details. Our sundry details, it is petty cash. Petty cash under our details or payee, then we will be writing cash, meaning it was cash of petty cash. Then we come to the next transaction, moving slowly but surely. R. Nelson for stationery, that means we bought stationery for cash from R. Nelson. It is not on credit now anymore, it is cash. We bought stationery. What do? We debit our stationery. Because we don't have a column for stationery, this will go to sundry ledger. Then we now say VAT control, which is input VAT. Then after we credit our bank, we do have the bank column, and the amount of the stationery that was bought from R. Nelson was 450. Therefore now we say 450. This will be recorded under bank. Then we say in this 450 there is VAT in it. We say 450 by 14 over 114. This gave us an amount of VAT. Let's check our VAT. Amount of VAT is 55 Rand 26 cents minus 450. We get 394 Rand 74 cents. Where do we record this amount? We record it under sundry ledger. Why sundry ledger? Because we don't have a column for stationery. Where there's no column for, you record under sundry ledger. So the 394 something there, the VAT amount there, and the bank, then under sundry details we record under sundry details for the stationery, we write stationery. Then under payee we say R. Nelson, meaning the person that we are paying goes under payee. Also that is cash payment journal, sorry, there we write there under payee the name of the person that we are paying. Then now we come to the next one, which is B Boxer. We are paying the balance of B Boxer. How much the balance, we still go and check. B Boxer balance on the 30th, and we got a discount of 10% from B Boxer. And from this one, this will be cool. I'll just go straight to the rent amount. Then now we have covered this one. We record it by looking first at the opening balance of B Boxer. We are paying B Boxer how much? 8.5, and B Boxer gave us 10% discount. And remember, where there's a discount at the point of settlement, you must take into account the VAT on the discount amount. So we have to debit our creditors control because our liabilities are decreasing whenever we pay them. So now we have our creditors control, and it has to be debited by the full amount. Then now we have to, if this is the full amount, all other transactions go to the credit side. That means now the VAT control, which is the input VAT, the discount received, which is the discount that is after VAT has been deducted, which we call it interest income. And also the bank, they go all to the credit side. What do we do first? We say 8,500, multiply this by 90%. Then we say 7,650. Let me check if it was 8.5 as correct amount. 8,005 or this amount, yeah, 8.5. Then I will say this is the amount we claimed VAT input from SARS on, assuming that we're going to pay that amount, but we ended up paying this amount. So now let's calculate how much is the overstated amount of the discount. Times by 14 over 114. Then we say this is the VAT we're supposed to have paid. How much is the understated amount of the VAT? 934.47. 8.5 by 14 over 114. And we say we claimed from SARS 1,043, but we were not supposed to claim this amount, 0.86, and we say minus 939.47, and we say the difference that is supposed to be going or to be recorded as our VAT is 104.38. 104.38, which is 39. 104.39. Then after, now let us calculate it in this other way. Other way will be 8,500. We multiply this by 10%. We get the discount amount as 850. And we say in this discount included here, it is an amount of VAT. Then we say 850 by 14 over 114 is 104.39, exactly the same amount. Then we say minus 850 here. Deducting 850 here will give us the amount of the discount excluding VAT. So yeah, this is the third calculation of the settlement 745.61. Third calculation of the settlement where discount is granted. With this now, I hope you are very clear in terms of how to calculate and how to record your transactions where the settlement discount is accounted for. Don't forget that these two must be negative in the subsidiary journal, not in the general journal. I don't want to see brackets in the general journal. When you go to the VAT control in the subsidiary journal for cash payment journal, this must be negative. This must also be negative, so that when you say debtors control, sorry, creditors control minus VAT minus discount, you must get the amount of bank. Let me just show you this slightly. Now when you come to the cash payment journal, which is this one, in other words, here we have 8,500 minus the discount minus the VAT will give us 7,650. I think it was 7,650. Yes, 7,650. It will give us that 7,650. That's what I mean when I say the VAT and the discount must be negative. It's 8.5 minus this will get to the amount of the bank. Then all other transactions and columns, you should be clear with that one now. So we come at the closing part now of this question. Piecemeal for salaries. We know that salaries, they don't have VAT. What do? We debit our salaries by an amount of 3,308 and we credit our bank by 3,380. What do? This goes to the bank column. This goes to the sundry ledger 3,380 because the salaries does not have a column in the subsidiary journal. So now the amount of the salary will be recorded under subsidiary ledger. This is where we are. just erase the previous calculation. Erase, this means under Sundry Ledger we record 3,380, under Bank 3,380, under Sundry Details this will be salaries, under Payee who are we paying? We need to go and check. Who are we paying? We're paying P. Smith, then under Payee we write here P. Smith. We write P. Smith, and you write your date as it's supposed to be. We paid for the carriage inwards 200 Rand, and the amount is 200 Rand for the carriage inwards, and the date is on the 28th day of the month. So we debit our carriage on purchases and input VAT then after bank. So now there is VAT to be accounted here. We will have to say debit our carriage on purchases. We have VAT control, which is input VAT. Then after we have our bank. Then we record the amount that we have paid. We paid an amount of 200 or 2,000. Yes, we paid 2,000. Then we go to our cash payment journal, recording the 2,000. We then say now in this 2,000 we need to extract the amount of VAT again, times by 14 over 114. Gave us input VAT of 245 Rand, 61 cents minus 200 Rands. This gives us 2,000 by 14 over 114. VAT 245.61 minus 2,000. It is 1,754.39. Now we know that we don't have a column for carriage on purchases, and where there's no column, this amount will be recorded under what we call Sundry Ledger. Then we write under details carriage on purchases, then under payee we write the person that we're paying. Then who were we paying here? K. To Aryan carriage for purchases. So this will be the person you write under payee, the person that we were paying. Then the amount of bank go to the bank column in the cash payment journal. P flat rent for B. Blom's private house. Remember, we are doing the books of B. Blom, and B. Blom paid or withdraw 4,000 for personal use, meaning for a flat which is for a private house, not for business. So now whenever the owner does something for personal use, we call that drawings. Then the owner withdraw money. The withdrawal of money does not have VAT, just only has bank charges. There's no VAT on withdrawal. There's only bank charges if the owner withdraw money. 4,000 is the amount that we're talking about. So 4,000 will be recorded there under drawings, and 4,000 will be recorded under our bank. So now where does this go? This go under our bank column. This go under Sundry Ledger because we don't have the drawings column in our cash payment journal. This go under our Sundry Ledger. Under our Sundry Details we write drawings. Under payee we write P flat, the one that was being paid for the money that was being withdrawn for the private purpose of the rental. Then after we paid the supplier LTD for goods 12,000, that means we bought inventory worth 12,000, and if we bought this inventory we have to debit our purchases. Then after we have our VAT control, this is the last transaction. Then after we credit our bank, and we say the amount that we paid is an amount of 12,000. Then we say in this 12,000 included is an amount of VAT that needs to be removed, because inventory must always exclude VAT 114. Then meaning our input VAT will be an amount of 1,473 Rand 68 cents. minus this 12,000. This means the cost of the inventory will be 10,528.32. You just record this under purchases, VAT control, and our bank, in which journal? Cash payment journal. Don't forget, all these transactions we are dealing with currently, they are under cash payment journal. Then under our payee, we specify whom did we pay. We paid the supplier. So we don't have the specified name for the 12,000 that was paid to this supplier for the purchase of the inventory. So we'll just say supplier or supplier Ltd. We specify a supplier Ltd. That will be under the payee. With that, guys, thank you very much. I've highlighted everything that I needed to highlight and explain this question. As I highlighted that there will also be other videos on VAT that will be introductory to this one. In fact, I started with this one on VAT, then I'll come to others. Please do go through and listen to them, and I hope you have listened already. Thank you very much. You've been a wonderful audience, listening very carefully and taking notes. Ask me any question if you have any questions, then I'll respond to you. I love you with the love of God. God bless you. Thank you.